given that we are in the non-banking financial services sector, we deal with a number of stakeholders. And the two main ones that stand out is NAMFISA, that we deal with quite regularly. And again, because of FEMA that I've indicated and other pieces of legislation, and also then the Ministry of Finance and Public Enterprises. We have quite a good relationship with both NAMFISA and the ministry as far as policy and regulation is concerned, and we really make sure that where relevant, we collaborate. For example, last year, NAMFISA issued a typology report on third-party payments, which is really an industry guideline or as far as third-party payments are concerned, and that was a collaboration between NaSIA and NAMFISA, which really just demonstrates the relationship we have and what can be achieved when the industry bodies and regulators or policymakers collaborate. Financial literacy is important because the decisions that the individuals make in terms of either taking out a life cover or contributing towards a pension, those decisions affect the non-banking assets. And if people are actually informed and they are well educated on their relationship with money and how they can actually make decisions for their own benefit, it's really from that strategic objective where NaSIA then, or the board, decided that let's put an emphasis on educating individuals so that they can make better financial decisions.
My name is Marco Volgraaf and I represent Old Mutual at the NaSIA Legal and Compliance Technical Committee. Financial literacy is in essence the ability to understand your financial transactions and financial services out there. Being financial literate would mean that you are able to save for retirement, look after your financial needs, and I think at the end of the day, avoiding and being less vulnerable to fraud. So it's a form of risk management, and it is primarily used to protect against the risk of a contingent or an uncertain loss. With insurance, we aim to manage and cover a risk, so that risk must carry some financial need. If you are underinsured, this essentially comes down to your insurance cover not being sufficient to protect you from that specific event or loss occurring. Overinsurance, on the other hand, comes down to having too much cover for a specific risk, and in some instances, that additional cover may not be paid out. Both over and underinsurance are generally more of a short-term concern in the short-term insurance market, where assets such as vehicles and immovable property are covered, where the amount exceeds the actual value of the property or the loss that a person would suffer. However, to be financially literate, I think it is important that we understand how much cover we have. Further, in instances where a policyholder takes out life insurance for a specific purpose, such as being required by a bank to have insurance as a requirement to obtain a mortgage loan or a home loan, as we call it, to mitigate the risk of the bank settling the loan when the borrower dies or becomes disabled. The borrower, or the policyholder as we would then call him, enters into a securitization with the bank. This basically means the bank becomes entitled to the payment of the cover should the disability or death occur of the policyholder. When the loan is then repaid, the cession is cancelled, the policyholder takes full control of the policy again. One could only use one policy for one loan, and there were instances where one policy would be sufficient, the cover amount thus, to settle multiple loans. However, in practice, the lender would take a cession to the full amount of the policy. So that basically meant that the bank would take the full amount and you couldn't use the policy for any other loan. So any proceeds left then after the bank was paid would then be paid to the estate or to the beneficiaries of the policyholder. Yes, following a request from the regulators NaSIA and PON to the insurance and banking industries, a collaborative effort was embarked on to rectify this. The process was facilitated by NaSIA and the Bankers Association of Namibia, and really was a team effort to ensure that customers are treated fairly. Following system and process enhancements by both the banks and the insurers, it has since become possible for one customer to utilize one policy for more than one loan where the cover amount is sufficient to cover both loans. Please always ensure that you review your financial services needs with a registered financial advisor or broker to ensure that your cover is adequate and that the correct risks are covered.
NaSIA is here to help everyone as far as savings and investments is concerned. So please call us, go on our website, you'll find very nice interactive videos, and we remain committed to help each and everyone in creating this culture of savings and investments.